What time is it though? Is it? Where's my phone? Where's my phone? Well, it is 12 p.m. So it's no longer the morning, but then welcome to my session once more. Today I'll be analyzing two more pairs, probably Gbpusd and one other pair. I don't know which one, but I'll see when I'm in the market. So I did analyze and I did upload another video. And in that video, can I just zoom in here and show you Gbpusd? I did analyze Gbpusd and I said Gbpusd is going to buy until these areas. And look at this, guys. I told you for scalpers that, if you're scalping, this is a perfect scalp trade for you. The market is probably almost likely going to turn around these areas and sell. But we will let the market tell us what it is going to do, because it is quite impulsive right now there. So moving on to Gbpusd, this is what I'm going to analyze for today, and probably maybe EURUSD or Euro GBP. I'll start on the daily because today is Monday. Start on the daily and see what the daily is giving me, and we'll take it from there basically. So where's this? Let me zoom out. So of course, what I do first is I mark my highs. This is my high. And I mark my lows. I'll mark this low because this one is in the current structure. So I'll focus on this one. These ones are also lows, but the market is going to get here before it gets here. So this one is the more current one. That's why I mark that one, right? And then as you can see, this market is a bearish market based on the daily. This is a bearish market, creating lower highs and lower lows. This is a lower high, lower low, lower high, lower low, lower high, lower low. So this is a bearish market, right? And you know what they say about bearish markets: don't trade against the trend. So if it is a bearish market, try to trade or try to get sells or hold sells more than buys. You can get buys on lower time frames, but strive to hold sells because this is most likely to go to the downside as the market is bearish. And as you can see, we came here and found resistance. We haven't touched this area, so the market is most likely to go to the downside. So holding buys, it might work out for you, but I wouldn't advise you to do it. You can get scalp buys and all that, but in a bearish market, strive to hold sells because you're most likely to make profits with that. So in the daily time frame, as we move on, we see we have a key area right here. This area is a key area because we might be having buys, actually, small buys in the lower time frames. Let me just get you can see this market has formed a double. This is most likely going to be a double bottom. Let me just draw my trend line right here, So this is how I approach the market right now as I'm seeing these. Right here, as you can see, there was a lot of noise in the market. Probably there was fundamentals or something happening right there because the candles were going up and down at the same time, Hence, I drew my trend line over this because this was a false breakout. The market broke out and broke back in the market, came back to retest and continue to the upside. So clearly that was not supposed to happen, or the market was trying to retest somewhere. Sometimes it's not even a false breakout, but the market is actually trying to retest somewhere and go back up, So this is what I have, fixing my trend lines. I start to fix my trend lines every time I scale down to the lower time frames. And then, as you can see, this market, honestly, for me, this market has a lot of small candles. Well, I call it noise, So when the market is noisy like this, confluence. This one is on our third touch, we have a double bottom formation again. So this is, I have three confirmations. Is it three? Double bottom number one. Correction to the downside, signaling bias. Number two, the touch is the most powerful touch. That's number three. And number four, we have this double bottom. So the market is most likely to buy until certain areas like these right here. Until this area, and might continue to the downside or break out to complete the 90% rule, which is this one right here. So you have to look out for that. And how do you do that? You wait. The market will tell you what to do. The market will tell you its movement, how it moves. So if it moves like this impulsively, then we are most likely to, reach these areas, because the market breaks out to the nearest key area. And as you can see, this area is quite key. This area right here, is the key area. So it's going to break out to these areas and probably correct, come back in a little bit and continue to the upside probably. But if it doesn't do that, it will probably do something like, remember guys, this is probability and things like that. If it moves to the upside and starts correcting like this, we all now know that, okay, we have something like this, and this is a signal to the downside. You enter yourselves and you continue holding with the market. And since it will be the third touch, it will be the strongest touch on this trend line. So the market might sell off and break this trend line, because the market doesn't listen to anyone. The market controls itself, guys. So I'm not going to sit here and say, oh, the market is going to buy like this. I just wait for the market to tell me this is what I do, this is what I'm going to do, and I follow by entering after the confirmation confirms to me. Just like right here, right now, what I'm seeing is this beautiful double bottom, I mean. Let me just remove this and I'll focus on the current market structure. Right now, I'm seeing this beautiful double bottom, and we all know textbook style. This is textbook double bottom. Market goes down, goes back up, goes up, comes back to retest these areas and continues to complete the double bottom up there. So this is what's happening. As you can see, the market went down, came double bottom confirmation. Okay, now it's trying to retest these areas and continue to the upside. Now, with us having this as a third touch, we are most likely to continue and, break out of these areas, retest again, hit this area, This is a nice trade, by the way. This is a nice trade. As I'm seeing it, this is nice. So with entries, how do you enter? Because this is like actually a simple, well, I wouldn't say simple, but this is like textbook style market structure, basically. So I've seen structures that are like crazy. I couldn't analyze. I was like, damn, what's happening here? You know. And most of the time when I see market structures like that, I stay away. Like with ZAR, USD ZAR. Recently, it was for me personally, it was moving in a funny way. So I was like, hey, let me stay away from this one because I might say, what, this is going to buy and it sells. And you know what, when you're not sure about your setup, try to risk less or stay away from the market. So as you can see, this is a double bottom, basically, a nice one. The market might just come back. Let me just do this just like this, actually, because what I'm seeing here is this market is moving in a weird way, man. You know, let me see. Yeah, like that. Let's see. I see the market coming back to retest these areas right here and continue to the upside. The reason why I say that is that as much as we have a double bottom, we also have this area right here, right? And now as this area, the market has formed something like this, like this is like a double bottom mixed with a inverted head and shoulder, because this we can say this is our left, and this whole movement here is our head, and we're going to expect something like our right, and the market moves to the upside. So you need to wait for that and see what the market is going to take, right? You wait for the market to confirm to you that, okay, this is what's going to happen. And you can see the market is impulsing to the downside right now. So, and sometimes some people use, let me see if it will work out, but I don't usually use Fibonacci retracements and things like that. As you can see, this is a key area. This is the 0.382 and the 0.5 area, which confirms my, I don't even know what to call it, what I see the market doing, basically, my opinion on the market. So yeah, this is it for GBPUSD. When it gets down here, wait for a confirmation candle, either an inverted hammer, just like a candle like this one, as you can see, this candle right here, or wait for, well, yeah, actually, basically, wait for something like this. This is a strong confirmation. Wait for doji or inverted hammer candle, and wait for an engulfing candle after this candle. Wait for these two candles to happen to confirm, because this is these candles are confirmation candles. The market is most likely to buy after it. So wait for these two confirmations when the market is around these areas, because the market can just go to the downside to come and form a triple bottom before it goes to the upside, because now maybe a lot of people are seeing this. Now the market wants to get people on the wrong side. People think, okay, now you're selling, but no, in reality, the market is trying to go to the upside to complete its third touch on this resistance trend line. So look out for that, guys. Look out for that. So let's just go to another pair real quick. I don't like, my first video was long. I don't think I want my videos to be that long again, because, hey, man, I want you guys to be excited to see my videos and things like that. And right now I don't even have viewers, funny enough. So this is Euro USD. So let's see Euro USD, and we'll take it from there. So with Euro USD, what are we on? Let me go to it. So we now know we are in a selling market. And I've been waiting for this market to touch this area for the longest of times, because I told myself I'm not going to enter until the market touches this area, with probability of it going to the upside or continuing to the downside. So let me just clean my charts, clean real quick so I can continue the analysis. So as you can see, this market has, you can just do something like mark this area also. You can mark as many as you want, but then, you know, I mark the most important areas. Well, this one is not really that important because the market is down here, you know. So then when the market is like this, you can try to draw your trend lines to see what the market is currently doing and what is most likely to do. You know, oh man, you know what? If the trend line doesn't work, don't force it. So what I'll do is I'll draw this these 2 points right here. We have 2 points. For me, for a trend line to be valid, I must have 2 points. So I have this point right here, and I have this other point right here. Because the market clearly turned when it was around these areas. Right. So let me just move to the impulse Dow top. It completed the what? The Dow top, and then decided to correct and continue to the downside. So that's how the market is, you know, but then not 100% of the time, 90% of the time it does that. You know. So let's focus on the current market structure. As you can see, we have this correction right here. And this correction had three touches, which the third touch was the most probable. And you know, with confirmations, you know, this is a trend line. So it touched the overall trend line and the trend line inside the other trend line. So, which is a high probability trade. If you're taking this trade, you are most likely to go to the downside. Now, this area is the 90% of this trend line, right? And we did, as you can see, we did reach those targets of the 90% rule. So now the market is in a corrective phase. What I see the market doing around these areas is, as you can see, this is a correction. This is nothing but a correction. Let me just scale down to the 1 hour. And this market can, you know, a market like this can be confusing sometimes. So to cut out the noise, I use support and resistance to see what actually is happening in this market, you know. Let me just try and draw my trend line around these areas. So basically this area is also a key area. The market is ranging right now. You know, the market is ranging. If one may say the market is ranging, you know, the market came down, went up, second touch. You know, it's ranging, and then out here it broke out a little bit. People thought maybe it's time to go down. Got people on the one side of the market, came back up. People thought we were buying, and this was a stop. What do you call this? Sell stop and buy stop, and sell limits and buy limits hands. You know, if you had put your stop loss around these areas and you bought, or probably around these areas and you bought, the market came down here to take you out, you know, because it knows that there are people in the market who knew that, okay, this might be this might be, let me just clean up real quick. This might be a false breakout, so we'll put our buy stops around these areas and wait for the market to come back. But no, the market decided, you know what, we're going to take them out as well. You know, and also if you had put in your sell stops around these areas, the market, the market will sell. Not for that one, for this one actually. Around these areas, the market went down. You think, okay, now we are going down to sell because you have a confirmation. The market closed above or below, came back in to hit your stop loss. And then after it played games, it went up. So right now, this market, we can say we have our first touch, we have our second touch. Well, these are three touches. Third touch, this might be our fourth, or one say, well, this might be our fourth touch actually, right? And with this touch, the market might just continue to the downside. So what we need to do right now is let me just scale down to the 15 minutes because I'm seeing a trend somewhere around here that can. Now, what I say for me myself is that, okay, we have something like this, we have something like this, right? Now, this is our first touch, this is our second touch, this is our third touch. So now, if you want to enter a risk entry, well, let me see. You can enter one could have entered the market around these areas till here because we have to complete what? Our 90% rule, right? The market is most likely to come to these areas. But if you want to enter in a more safe or reduced entry manner, you can just wait for the market to break out to these areas and retest, and you enter from these areas up here after confirmation or something like that, and go down with the market. The stop loss is probably going to be around these areas. That's how you can enter your USD. But then also, Euro USD and this DXY pair, they work hand in hand. So let me just see. I'm not going to analyze that one, but because I like seeing the market for what it is on its own. I don't like, why do I have such a big line around these areas? I don't like, saying this is going to sell because this is going to buy. But as you can see, this is a buying market. We are in a bullish trend. As you can see, we found our support right here, and now we are on our way to find the resistance down there. As we are on our way to find the resistance up here, Euro USD is on its way to find what? Support down here. So this is a confirmation for me also that, we are in a selling or bearish market. So yeah, guys, that's it for today. Hope you did enjoy the video. And if you did, please like, share, subscribe, and comment down below if you want me to analyze a particular pair or anything like that. Thank you.